Welcome everyone to the Kendall Report, where I share my 42 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, another week has just went by. It's been an interesting one. We've seen 4 days in a row lower closes. We haven't seen that for a while. But in spite of that, since last Friday, on the basis the S&P, we're down about 1%. So this isn't some kind of disaster. We're actually still trading down into some of this major support that I've been talking about. But we look back on yesterday, S&P finished down 0.46, NASDAQ down 0.25, and the Russell down 0.6. The interesting thing about yesterday was that we saw a huge rally on the S&P. We traded all the way up to the 45.29. So if you're using the market grid, there's some great trades off the grid yesterday. So we just continue to see a little bit more volatility over the last couple sessions, but we finished down as we came into that last hour and a half or so. We saw lots of relentless selling, just pushing the markets lower. As we come into Friday, there's one main report that we have to look at, and that is the producer price index coming in. It's expected to show a 0.6 increase, and this is likely to not be a surprise. These numbers have been coming in a bit hotter, but if we do print something like a 1%, maybe that could put some downward pressure on some things. Talking a little bit more about yesterday's action, we did have a 30-year auction on the bonds, and it went really well, so well that it triggered some buying across the spectrum of the yield curve, and the treasuries were pretty bullish yesterday. The 10-year finished down at 1.29, and that's pretty much in the range where I've been talking about, literally 1.24 to 1.37. We printed up to the 1.37, so we're just staying in that range. Also yesterday, we saw 5 of 11 sectors negative. There still was a mixed picture there. Like I've been talking about, while the market's been selling off, there's not any material selling going on. We did see some action in our database, and once again, we're back below that 42% level. I'll go through all those details in a minute. The featured report yesterday that really caught the bid was the claims numbers. They came in at 310,000, better than expected, and the continuing claims dropped as well, down to 2.748. I'm still looking for a 2.5 number to continue this improvement in the employment situation we've been seeing over the last couple of weeks. Just a quick comment on this. I've been talking about my expectation is that we will see employment start to slow down, but I still believe that won't occur until sometime in late September, in October, and November. I think the fourth quarter we'll see some backfilling there as far as the employment numbers going and how the situation will unfold. I can just see from the metrics what's going on. We should start to see an uptick in unemployment, and we should see some of these numbers start to move up. So we're still seeing improving numbers, and I still believe this is about the seasonal tendency in a lot of the hospitality jobs and things coming back. We saw a nice bid come into the airlines today. So we're still seeing that travel theme, the reopening theme still out there. In spite of that, there's a lot of mixed pictures out there as far as the economy goes. It's not a real clean-cut deal. There's still a lot of rotation going on. In conclusion, this week has been interesting. We're down approximately 1%. Whether we see further follow-through or not will be interesting. I'll cover all the exact support levels that I think are important. I still see this market in that uptrend, but in the same pattern that's been unfolding for the last several months. Let's go ahead and take a look at the charts, see how the end of the week is set up. As I begin with the WaveTech Database, we did see a fair amount of selling last night. 1,367 sells versus 412 buy signals, pushed the percent bullish down below that 42% level to 39.50. And while this is significant, the real situation I'll be watching, and when we come into Sunday night, I'll be covering this on the video then. The weekly database remains around 65% bullish. I am expecting to see some reasonable selling, but not a lot. We could drop below the 62% level, maybe down to around 58. that would be a fairly big tranche of sell orders to come in to push it down to that level. But I am expecting to see some sideways movement. We look at a number of the metrics over on the right-hand side here. We see that the projected holding periods are only about 53% realized on the weekly, which usually will get a little higher than that before we'll see a rollover. We were up to around 80-90% going back about 2 months ago, so we have seen a bit of a negative rollover. I'm going to show you something I don't usually talk about on the daily videos, but this is the overall percent bullish numbers out of WaveTech, and this is a chart that's in there. We also have a chart on our main website which breaks things down even further than this. Thing I want to discuss here, this is the overall bullish chart, and there's a couple elements here that are important to look for, and this is what I think the setup is going to be. This happens all the time as a characteristic of the database. We see a peak, then we see a secondary peak, a sell-off, and usually that will proceed. So this goes into the first quarter of 2018. We know we had a big sell-off in the fourth quarter, but this was the sign that was about to happen. So we see a secondary rally. It fails to get anywhere close to these highs that we had up here, and then we see the market decline again. But before that happens, we see a big steep decline. We go all the way under 20%. This is the intermediate database. Then we see ramp up, and we see the cycle start over again. We get, in the case of 2020, we got up to a peak, and you see we started to see some selling before the high actually happened. We saw a extreme selling, obviously, in the 2020, in this intermediate models, only to see this thing just bounce right back. But now where we are now is, this is suggesting that there is a potential top coming in the markets, but it's going to come in a bit later in this pattern. The point that we're going to see here is we've seen this peak. Now what we're likely to see is a secondary peak, and then it will set up just like this pattern did over here, and then we'll start to see a decline. Meanwhile, the market should continue to move up, even though the percent bullish is going down. So the participation rate has been going down since literally going at the beginning of this year. That's also what we've been seeing in the daily database. That's why we keep getting up to 48, 52%, and then we fall back into the 30% tile range. We've even went down as low, in some cases, down to around 27, 22% in a couple of these declines. And this is not just this year. It was also happening around December. We saw an increase on a daily bullish, but we've never been able to get that traction after that early 2021 bid that we saw. Now we're seeing everything fade, and this is just on the next level. So as I mentioned, I do expect to see this thing drop down even further on the overall database. So this is going to be a focus of mine as we go forward, watching for this final divergence that will set up an ultimate top. The first market that I'm going to cover tonight is the S&P futures. They're up 13 handles. When I first started the opening commentary, we were up about 7. So we've doubled the rally. The futures are back to the 44.96 level. We did print just 44.9725 was the high so far. So we are seeing some of this bounce back happen after yesterday's decline. Now, one of the key numbers that I was talking about yesterday is the 21 period moving average, and that is at the 44.74 level. We did see a print down yesterday to 44.76. The S3 number is 44.77. I mentioned in the opening comments that the market grid was pretty accurate. We had an R2 S3 level yesterday. R2 was 45.20. The actual high yesterday, 45.1975. So almost a spot on hit on R2. We reversed off of that level and traded down all the way to S3, just below S3. So it was a substantial amount of movement yesterday, about 40, 45 handles overall. And we come into today, we basically have bounced off this 21 period moving average. It's moving up at 44.74. and we saw a low of 44.79, high 44.97, last trade 44.96. So we've seen a nice bounce off of there. 45.07 is the 10-day moving average, and it's still got a slight upward bias, but we're likely to try to move up back above that level. We look at the ranges for today on the market grid. 45.02 is R2. We've already traded above R1, so there's a possibility of trading up to the R3, which would be a challenge of that 10-period moving average. Now the PPM1 is turning up. PPM2 and 3 are starting to look good again. I know everybody's talking about a negative story here in September, but this is not what appears to be going on from the pattern. I talked about this last night. We keep getting this dipping pattern down into the moving averages, and then we get a rebound. So we're seeing just more of that same pattern unfold. We look at the S&P cash. The STX was 44.90. We saw a low of 44.92. The high 45.29. R2 was 45.25.80. So we traded on the cash just a little bit above that R2 number, and basically had an R2 S3 as well on the cash market. We go to today's expectation, we're probably looking at S1 to R2, possibility of printing R3, which would be 45.15. All-time high right now is 45.45. So we're not that far off of that high. So we could see a bit of a rebound. We should stay above the 44.77, which is the 21-period moving average as we come into the end of the week. Looking at the weekly chart, we did see more weakness than I expected. I talked a lot about this on Monday night's video, that S2 4,500 should be solid support on the cash. Well, we dipped below that. We got down to a 92 low. S3 was 44.82. I did see the weakness, and we'll see what kind of bounce we get tomorrow, whether we can see if we can trade back to S1 toward that 45.19. I don't see us getting anywhere near the R1. We had a high this week of 45.35. The R1 was 45.51. Originally, I was projecting S2 R1. That would take quite a bit of a rally. I don't see the news unless something comes in on the PPI that's a surprise and it's bullish. Next market that I'll review tonight is the NASDAQ. NASDAQ is trying to rally back right now. It's up 36 handles, 1587. The magnet in this market should be the 10-period moving average. I've talked a lot about that. 15,610. We've had a high of 15,590 overnight. But looking at the grid itself, R2 is 15,617. I suspect we'll trade to an R2. S1 is not likely in this pattern here. We're looking at 15,519. We could see an intraday dip, but I don't see that happening. And as I mentioned in last night's video, the NASDAQ continues to be a little bit stronger on a relative basis, although we're seeing PPM1 starting to fade pretty quickly. PPM2 has cut through its first derivative. We're seeing a mixed picture here as the longer term averages are trying to turn up. We're seeing PPM3 actually turn up here. So we're getting that mixed picture, and all that really means is we're going to continue to climb along this line. The primary demand line now is 15,373. A dip down to that level would be a buy the dip opportunity. That's, once again, 15,373 would be the extreme. A quick review of the Russell. The Russell futures at the moment are up 15 handles, 2261. I talked a lot about this 2250 number. We closed at 2249 yesterday. I would like to see this get back above that level. This is the daily chart. The PPMs are neutral, although PPM3 is turning up, which suggests that major support at 2223. The lowest that we printed yesterday was 2141, and I think we'll get back above this number. Let me bring up the weekly chart because this is where this number exists at, and that is going to be the 2254.99. So 2255. If we close back above that level, that will be positive. The PPMs are still somewhat neutral, but I expect if we stay stable, we stay above this number, we should start to see the weekly PPM start to turn up next week. The final market that I'll cover tonight is gold. Gold was able to get back over that 1800 number that I talked about yesterday. Yesterday's high, 1803.40. Still looking for a move above 1800 today and maintaining toward 1801 with the possibility of trading toward 1810. A close but in the range of 1801 to 1810 will be very positive as we come into the end of the week. We're looking at a very mixed picture on the daily PPMs. Let's go over to the weekly because that's where the real analysis is going to show up. Now we're seeing the PPMs are still slightly positive on a weekly basis. We still go back to that flash crash several weeks ago. That is going to be your key low. The fact that we traded under the STX number, 1799 was STX, the low 1783, we spiked back into the pattern. And like I said, 1803 would be my preferred close for today, and anything above that level, 1803 plus as high as 1818 would be extremely positive, and we should see this pattern start to turn up again next week. This will complete the video for tonight. Thanks everyone for being part of the channel. Have a great weekend, and we'll talk to you on Sunday night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.